Hey, this is Awais with OpenTrader, and this is the market analysis and outlook video being shot on Wednesday, September 26th, midday. Now, in our last video, which was shot on Monday, we discussed the idea of a directional move away from 1456.75, and we identified some upside objectives at 62 quarter and then 67 to 68. And then in the event of a failure at 1456.75, we had our primary downside objective at 1434 quarter. So as we can see on Tuesday, we failed pretty much at 1456.75, right? The high of day was 1457, and we got the directional move, the liquidation break below value, and price got to a low of 1435, which is within 3 ticks of our downside objective. And then we opened today, failed at the bottom of yesterday's range, and the initiative selling continued down to 1424. Now, to understand the movement going forward, we actually have to take a slightly bigger picture view, right? So we're actually going to zoom out a little bit. Right now, you're looking at the chart that begins on September 13th, and we're looking at what price did since then, and we're looking at the composite. Now we're actually going to zoom out and look at a chart that begins on Thursday, September 6th. Because once we zoom out, we realize that we actually got an upside breakout on September 6th, and then another upside breakout on September 13th. And now we're looking at the composite of the entire range, right? And what we see is that we had an open gap at 1423.5, which I would consider filled at this point. We got within 2 ticks of it. That's close enough to consider gap fill. And we got responsive buyers active over here for a push back up towards yesterday's range. And now we're building value around 31 quarter. But once we look at this entire range, we see that we have heavy acceptance at 1428, right? That is the composite VPOC when you consider this entire range. And what we're going to do is, going forward, we want to see whether price is rejecting 1428 and trying to move higher, or whether we're failing at 1428 and moving lower. If we fail at 1428, for example, if we close below it today and we start seeing failure over here, we're going to expect a move down to another gap that we have at 1419.5. And then the entire composite value area low is at 1418.5. So those are actually very good areas to look for long opportunities if price gets down there. So if we start failing at 1428, we're going to look for short setups down to 1419.5, 1418.5, and then once price gets here, we're going to shift our bias and start looking for buying opportunities because we expect responsive buyers to be active on the first test below value for rotation back up towards 1428. On the upside, if we start holding 1428, we're going to look for price to test 1437.5, which is yesterday's VPOC, and then we also have yesterday's close at 1437 quarter. So that's an open gap that we think is going to get filled as long as price starts holding 1428, which it is doing right now. And then above 1437.5, we would expect a test of the range over here. So we would expect a test of 1442.75 to 1444.75. And if we actually move above there, then we're going to look at our prior chart, right, this one, and at that point price would be testing the low end of this balance area, right, from the September 13th breakout, and we would expect some responsive selling on the first test of the 1446 to 1448 area. So we have to combine kind of these multiple time frames and take a bigger picture view, and then keep both of these time frames in mind, right? As we're proceeding and moving forward, we want to be analyzing and keeping track of both at the same time to judge the strength or weakness of the market, right? So before, this was the main chart that was in play. Now, since we've broken below the low of the breakout, we're taking a bigger picture and we're looking at this chart, which is going to be in play, which combines the two. And those are our ideas going forward. So keep a close eye on 1428 use that to establish your bias. If we're above it, the bias is bullish. If we're holding below it, the short-term bias is bearish. And then look for reactions at these levels that we've highlighted below and reactions at the levels highlighted above. So when we move back up, we would expect some responsive selling at 42.75 to 44.75. So those are some ideas on the day and for the next couple of days. We also want to answer a question that was asked on the blog. So let's get to that. So Peter asked, according to the analysis that was posted before, why were we expecting a directional move? So Peter, let's go back to our other chart. So the reason we were expecting a directional move is that the S&P had built heavy acceptance at one level, right? At the time it was 1456.75, and then that shifted down to 1443. We were balancing within a narrow range, and typically when we get 5 or 10 days of overlapping range and we're kind of trapped within a range, typically one side is going to tip and we're going to get a directional move away from that heavy acceptance level, right? Because the market is not going to continue to trade the exact same price or the same range for an extended period of time. The expectation is that there's going to be a shift in perception of value, and one side is going to give. So in this case, the short-term buyers gave out, and we got a liquidation move down to retest that breakout yesterday, and then today we filled the gap, and we tested the 1428 level. But basically, really the tip was that we were building heavy acceptance at a single price. Value was compressing. We were putting in narrower range days and just balancing within a range, right? The market shifts from balancing environment to a trending environment, right? You balance, and then that actually becomes the start of the next short-term trend, and which is what we got over the last couple of days, right? We got rejection at 1456.75. There was a shift in the perception of value, and once price started heading lower, then all the short-term buyers that were building their positions in the 1443.5 to 1456 range actually started getting stopped out, and that resulted in more liquidation, more short sellers piling on and driving price lower. So there was basically a shift in the perception of value, and now we moved back down to what was the prior, where we had acceptance prior to this breakout, right? So before this breakout, there was agreement at 1428 as value, right? There was agreement between buyers and sellers that 1428 was a fair price to facilitate trade. And once we failed at 1456.75, price went back to where it was accepted before. So that's essentially what happened. And now we're going to be looking for another shift in value, right? So now we think that 1428 is going to serve as, you can say, a bull-bear line in sand, or you can use it as kind of an over-under level, and look for either acceptance or rejection at that level, and judge the health of the market by looking at 1428. If we hold above it, then it would tell us that short-term buyers are viewing 1428 as an unfair low. And right now, if we look at the profile for today, we can see that the push below down to 1424 was quickly rejected, right? So essentially, those prices below are considered unfair, and you can see that price quickly pushed back up above 1428, and now it's been balancing above 1428. So these are some key levels to keep in mind, and I hope that answers your question. If not, please feel free to post a comment, and I will elaborate on this, and we'll cover it in the next video, and we'll take it from there. And anyone else, if you have any questions, if you want us to elaborate on any of the market logic or kind of the way that we're looking at the market and price, feel free to ask any questions in the comments, and we'll either address them right there by replying, or if it requires a kind of a longer answer, then we'll cover it in our next analysis and outlook video. All right, I hope everyone traded the move well, and I hope these videos are helpful to you in your trading. We'll catch you in a couple of days. Take care.